So in today's session, we are going to look at budgeting. Budgeting is an important aspect of the business. Whenever you are running your business, you must know how to prepare a budget. Even at a personal level, it's good to have a budget, a personal budget that will guide you in your daily routines. So what is a budget? So when we talk of a budget is a quantitative plan of action prepared in advance of the period to which it relates. So what do you mean by this? A budget must be quantitative, and it's a plan that is prepared in advance. We don't prepare budgets when the actuals are taking place. No, budgets must be done in advance, and they must be quantitative. So what is a budget? A budget is a quantitative plan of action prepared in advance of the period to which it relates. Everyone normally does budgeting. The only difference is some people put budgeting into writing, but some just put it in their mind. But everyone normally plans. But now we are being told it's important to put the plan into writing. And it's important to make the plan quantitative. So a quantitative plan of action prepared in advance of the period to which it relates is what is known as budget. Now, is it important to prepare budgets? The answer is yes. Why should we prepare budgets? What are the reasons for budgeting? I've given 8 reasons why we need to prepare budgets. The first reason, it helps you to plan for the future. If you want your future to be good, if you want to have a forecast of the future, it's important to prepare a budget so that the future does not come to you as a surprise. So it's important to plan for the future. So budgeting helps in planning for the future. That's the main first purpose of budgeting. Now, budgeting also helps us to share out. In other words, to allocate the limited resources that we have. So that means budgeting helps in resource allocation. You know, we operate in an environment where we don't have everything that we are in need of. We operate in an environment where there are limiting factors. So how can we appropriately share the limited resources that we have? By preparing a budget, which is a plan. So it helps in resource allocation. Number 3, budgeting helps you to control your expenditure. If you want to manage your expenditure effectively, prepare budgets. But if you go for impulse buying without just planning, in that case, your expenditure will be uncontrollable. So if you want to manage your expenditure, prepare budgets. The 4th reason why we need a budget, it helps in evaluation of performance. At the beginning of the year, we set targets, we prepare budgets. During the year, there is the actual performance that takes place. At the end of the year, we need to evaluate, to compare the budget versus the actual. Did we exceed the budget or we fell below the budget allocations? So our performance will be evaluated in relation to the budget that has been set. The 5th point is motivation of employees. Now, when we set a budget, it sets a target. The targets that are set will be motivators to employees because each employee will be striving to meet or to exceed the expectations which are put down in a budget. So budgeting acts as a motivator because everyone will be striving to exceed what is allocated or what is shown in the budget. The 6th reason, it helps in authorization of expenditure. For example, in public service, you cannot spend on an item which was not allocated in the budget. So budget acts as a form of authorization because you can only spend on an item allocated in the budget. Point number 7, communication of targets. Budgets communicate to us the expectations. Budgets gives us a plan. So you only need to ask where the budget is, go for it, and you will know what is to be done over the year or over a given period. So budgets communicates the targets of the organization. The eighth point, it helps in coordination of activities of different departments. Through budgeting, the departmental heads are brought together and they reason as a team to enable them prepare, number one, functional budgets, and number two, master budget that combines all budgets within the organization. Therefore, as we conclude on reasons for budgeting, there are 8 reasons. Planning for the future, resource allocation, control of expenditure, evaluation of performance, motivation of employees, authorization of expenditure, communication of targets, and coordination of activities of different departments. Now, whenever we are preparing budgets, there are a number of steps we need to follow in budget preparation process. Assume we are preparing budget for the first time. You have never done any budget before. What are the steps that you follow to enable you prepare the budgets? What are the steps do we follow to enable us prepare a budget? Okay, so let's move forward. I was just reading what is in the chat. Sorry for that. Now, what are the steps that we follow in the budget making process? There are 8 steps that you need to follow in the budget making process. What are the steps? Step number 1, set up the long-term objectives. Now, this is normally the first step because any budget that is to be prepared must be in line with the objectives of the organization. So if maybe you are not mindful of the costs incurred, that will also be reflected in your budget. So if your objective is to minimize costs, you will realize that even your budget will really be cut. You will try to reduce the expenses as much as possible because the objective is to minimize costs. Maybe your objective is quality, and you therefore don't mind how much you spend on a given product. Therefore, it is important to set up and to know what are the objectives of this business. Once you have known the objectives of the business, because the budget will be prepared in line to the objective, in line with the objectives, you need to move to the second step, which is formation of a budget committee. Now, when we talk about budget committee, it's a committee, the people who come together to prepare the budget. They are known as a budget committee. Now, a budget committee may have very many members. Budget committee may have very many members, but at least there must be representation of the chief executive officer. There must be a representation of the heads of departments. There must be a representation of the budget officers. So at least those 3 must be represented in any budget committee. A budget committee might have very many members, but there must be a representation of number 1, the CEO, number 2, the heads of department, and number 3, the budget officers. Step number 3, preparation of a budget manual. Preparation of a budget manual. Now, what is a budget manual? It's just a policy document that helps show how a budget is prepared. Who should prepare the budget? Who reports to who in the budget making process? A budget manual shows how a budget is to be prepared and the procedure to be followed in the entire budget making process. That is shown through a budget manual, as preparation of a budget manual as our 3rd step. The 4th step is identification of the limiting factors. You must be in a position to identify what are the limiting factors, because we said we are in an environment where we don't have everything that we are in need of. And therefore, we must know what are the limiting factors. We must be in a position to identify the limiting factors. We must be in a position to identify the limiting factors. Now, in budgeting, a limiting factor is known as principal budget factor. So when you hear the term principal budget factor, it refers to a limiting factor in the context of budgeting. The fifth step, once you have identified the budgeting limiting factor or principal budget factor, the fifth step is to prepare what is known as an initial budget. So remember, an initial budget is a budget that you prepare for the first time. Now, when you're preparing a budget for the first time, you normally tend to overstate your expenses because you expect expenditure to be high in your first year of operation. So normally expenses are overstated and income or revenues are understated. That is in an initial budget. So this process is known as having what we call a budget slack. A budget slack is a budget which has got expenses which are slightly overstated and incomes which are understated, because you expect that in your first time when you're operating, expenses will be high and income will be low. Rarely do you break even in your first year of operation. Step number 6 is to review initial budget. Now, initial budget, as step number 5, had got a budget slack where expenses were overstated and incomes were understated. So when you are reviewing initial budget in step 6, you remove the overstated expenses and you also remove the understated revenues so that you have figures that are close to actual. That is step number 6, review of initial budget. Step number 7 is preparation of a master budget. Preparation of a master budget. Now, a master budget is a budget that brings together all the other functional budgets. A master budget is a budget that brings together all the functional budget. In a master budget, we must have cash budget, we must have budgeted statement of profit and loss, and we must have budgeted statement of financial position. Now, there is no budgeting process that is always 100% successful. So the last step is to continuously review the budget making process to ensure we better even in the next period. So there are 8 steps that we follow in the budget making processes. Step 1, set up the long-term objectives. Number 2, formation of a budget committee. Number 3, preparation of a budget manual. Number 4, identification of limiting factors. Number 5, prepare an initial budget. Number 6, review initial budget. Number 7, preparation of a master budget. And number 8, continuous review of the budget making process. Continuous review of the budget making process. Now, what do we cover in the context of management accounting in budgeting? What will we cover in budgeting? Now, we look at number 1. In other words, we are looking at scope of budgeting. What do we cover inside budgeting? So number 1, we look at what is known as functional budgets. So actually today, our focus will be on functional budgets. So let's be very attentive. Number 2, which we will look at tomorrow, is fixed and flexed budgets. That is number 2. And number 3, cash budgets. So fixed and flexed budgets and cash budgets, and also approaches, I may touch on them. We will cover them tomorrow. But today's session will focus on functional budgets. Now let's start with functional budgets. There are 6 major functional budgets. You should be familiar how they are prepared. Number 1, there is what we call a sales budget. A sales budget is basically a budget that shows your sales and selling price per unit. Number 2, we have what we call a production budget. Sometimes it's called a purchase budget. So production budget is a budget that shows the quantity of goods that have been produced. The third type of budget is known as material usage budget. Material usage budget shows you the quantity of materials used, the quantity of materials consumed. The fourth budget is known as materials purchase budget. In a materials purchase budget, what you purchase will be influenced by what you use. So your purchasing will be influenced by your usage. So the results of a material usage budget are used to form materials purchase budget. Number five, we have what we call a labor budget. A labor budget basically shows what are the labor hours, what are the total labor hours, and what is the rate of pay per hour. So it multiplies the labor hours times the rate of pay per hour. And finally, number 7, we have what we call overheads budget. Remember, overheads are indirect costs. Overheads can either be fixed or variable. So when we are starting functional budgets, we will be focusing on that. So our first functional budget is known as a sales budget. Now we all know that in sales, sales is a product of, a function of sales units and selling price per unit. So sales is a function of, sales value is a function of sales units times selling price per unit. Sales units times selling price per unit. Suppose you have two products, A and B. So you will get your sales units of A, sales units of B to give you the total sales units if you add A and B. But we also have selling price per unit. So selling price per unit of A, selling price per unit of B, but we don't have any total selling price. You cannot say that if I add the selling prices and then I multiply by total units, I'll get the same answer. No. In selling price per unit, you don't need to get the total. So sales value or sales budget is your sales units times selling price per unit. Sales units times selling price per unit to give you the sales value. And in part B, also, in budget maybe B, again, you take your sales units times selling price per unit to give you sales value. And then you can add sales value A plus sales value B to give you the total sales value. I hope we've understood this first functional budget. So we have a question with us. The question reads, a company makes two products, PS and TG, and sales for the next year are budgeted to be 5,000 units of PS and 1,000 units of TG. Planned selling prices are $95 and $130 per unit respectively. Required, prepare a sales budget for the next year. So remember, in our format of budgeting, in sales budget A, B, total. Sales units, selling price per unit to give you sales value. Now, to enable me answer that question, I need to go to an example in Excel. The same example, but we look at it in Excel. So it's the same question. So let me repeat the question. A company makes two products, PS and TG. Sales for the next year are budgeted to be 5,000 units of PS and 1,000 units of TG. Planned selling prices are $95 and $130 per unit respectively. Required, prepare sales budget for the year. Prepare sales budget for the year. Now, in order to prepare sales budget, let me look at my solution. Now, in order to prepare sales budget, let's assume, sorry, not assuming, we have product PS, we have product TG, and we have total from the format that we have already looked at. And then you show what are your sales units. You also show what is your selling price per unit. What is your selling price per unit? So, and then you get the sales value. Sales value which is the budget we are looking for. Now, of course, the sales value in this case will be in currency form. Selling price per unit will also be in money form. Let's assume our currency is dollars. So what is our sales units? Sales for next year are budgeted to be 5,000 units. And for TG are budgeted to be 1,000 units. 1,000 units. The total is 5,000 plus 1,000. So it gives you 6,000. And then we look for selling price per unit. Plant selling prices are $95 and $130 per unit respectively. $95 and $130. $130 per unit respectively. So we have that. So what is the sales value? Sales value is sales units times selling price per unit. So sales units times selling price per unit. Sales units times selling price per unit. So I'll do the same for product TG. And then now when we take product PS plus product TG, that gives us the sales budget. So the total sales value. Remember, we have said we don't put any figure there. So this is a format of a sales budget. So when we are preparing a sales budget, that is the format that we prepare. Now, not all questions are that direct. So let's look at another type of a question that still asks you to prepare a sales budget. So remember our solution here, we were preparing a sales budget. Sales budget. Sales budget. So let's look at another example from what we have. So clearly, let's read through these. We understand it, and then we solve it. So another example, which is quite tricky, so let's make sure we keenly follow it. A company makes two products, A and B. I'm repeating. A company makes two products, A and B. Now, let me make a statement. This was a long question, but I broke it down into parts. When I'm covering sales budget, I only extracted the part relevant to sales budget. When I'm covering production budget, I only extract what is relevant to production budget. So questions are not this short. They are long questions which are broken into parts. So a company makes two products, A and B. The products are sold in the ratio of 1:1. Planned selling prices are $100 and $200 per unit, respectively. The company needs to earn 900,000 revenue in the coming year. So required, prepare a sales budget. So in our solution is asking us, we want to solve or we want to prepare a sales budget. Let me slightly increase the size. So in this question, we are being told there are two products, A, and the other product is B. And then we also have the total. So as usual, in our routine, there is a sales units. We have selling price per unit. And then we have sales value. Sales value, which of course is the budget. So we need to read the question and carefully place each item where it belongs. So let's read again once more. So a company makes two products, A and B. I've posted that. The products are sold in the ratio of 1:1. So the sales units, if A is X, B will also be X. and the total will be 2x, because you have been told in the ratio of 1:1. So if A is 1,000, B will be 1,000, total will be 2,000. If A is 500, B will be 500, and the total will be 1,000. So that's why I'll put a ratio of x to x, because you have just been told a ratio of 1:1. Plant selling prices are 100 and 200 per unit. So 100, and this other side, we have 200. And of course, the selling price, we can never put it. So in this case, what is our sales here? Our sales will be 100x, and this one will be 200x, and this one will be 300x. So you realize there was a lot of information that was missing. So required, prepare a sales budget. So we will start by find the x. So how do we find the x value? So our first step is to find the x, because it was a ratio of 1:1. The sales units was 1:1. So in order to find the x, we can use this to enable us find the x. We can say, we can use sales value. So we can say 100, sorry, this was given, 300 was given, x was given. The company needs to earn 900,000. So this one is 900,000. So it was given, we didn't need to make it x. So we can now find the x, because this 900,000 was provided. I forgot to include it, 900,000. So we can say 100x plus 200x is equals to 900,000. You are aware of that from the format. So 100x plus 200x gives you a value of 900,000. So let's get the x. So 100x plus 200x is 300x. So 300x is equals to 900,000. Now we need to find x. X is equals to 900,000 divided by 300. So what is our x? X is equals to 900,000 divided by 300 is, x is equals to 900,000 divided by 300,000. I don't want to use Excel. I have the option of using Excel. Is how much? Is this divided by that 3. So it's 3,000. 3,000. So x is 3,000. X is 3,000. So 3,000, of course, units, because sales is in units. Now, after doing that, we can now come and prepare the budget and complete it. So our x, we have found x as being 3,000. The second one, it's a ratio of 1:1. So that will be 3,000. And this will be 3,000 plus 3,000. That will give you 6,000. Now, sales value will be 3,000 units times selling price per unit, 300,000. And this other one will be 600,000. And when you take 300,000 plus 600,000, it gives you 900,000. So that is how we prepare a sales budget. So sales budget is sales units times selling price per unit, sales units times selling price per unit to give you the sales budget, So that is how we get a sales budget for us. So let's continue. So we have looked at example 1 through Excel, and we have also looked at example 2. So the second functional budget is known as production budget. is known as production budget. Now, how do we prepare production budget? Now, we always have this common formula that is known as, in preparing income statement, sales minus cost of sales gives you gross profit. Sales minus cost of sales gives you gross profit. Now, sales minus cost of sales. How do we calculate cost of sales? So if the ratio is, Jocelyn, you're asking, sir, what if the ratio is 1 to 2? One will be X, another one will be 2X. One will be X, another one will be 2X. So, Jocelyn, you are right. I hope you are clear so that I move on. Is it clear? Jocelyn, I am expecting a response. Okay, thank you. Let's move on. So if it is a ratio of 1 to 3, one will be X, another one will be 3X. If it is a ratio of 2 to 3, one will be 2X, another one will be 3X. Okay, let's move to the second functional budget. It's known as production budget. So in production budget, we are saying sales minus cost of sales normally gives you gross profit. There is a formula we want to develop. We want to come up with. Now, how do we calculate cost of sales? We all know that cost of sales is opening stock plus purchases. But if you are not purchasing, you are producing. So opening stock plus production, if you are producing, minus closing stock, gives you cost of sales. Therefore, we have sales minus cost of sales, which is opening stock plus production or purchases minus closing stock. Now, we need to make production the subject. You can only make production the subject if you open the bracket. So let's open the bracket. Sales minus opening stock minus and a positive gives you a minus. So sales minus opening stock minus production. Minus and a minus gives you a plus. So sales minus opening stock minus production plus closing stock. So that is what we have here. So we make now production the subject. When production crosses the equal sign, we are assuming zero profit. When production crosses the equal sign, what will remain with is sales minus opening stock plus closing stock. And that is the formula for production budget. Production is sales minus opening stock plus closing stock. Therefore, production units budget is sales units minus opening stock units plus closing stock units. Sales units minus opening stock units plus closing stock units. Let's look at the format. Format is as below. Product A, suppose we are making product, we are producing product A, B, and C. What is the format for a production budget? You list your sales units, you less your opening inventory units, you add your closing inventory units to give you production units budget. Again, I'm repeating, sales units, less opening inventory units, add closing inventory units to give you production units budget. Let's look at an example. So the example reads, a company makes two products, PS and TG. Forecast sales for the coming year are 5,000 units and 1,000 units respectively. The company has the following opening and required closing inventory. So opening inventory and required closing inventory. So the question asks you, prepare a production budget. I'm again repeating, this was a long question. I just broke it into parts so that we understand the context. Later on in a different session, we will look at one question that combines all from the past paper. So that is the question that we have. So let's go to Excel. So the same question, I've posted it there. So let's try solving it in Excel. So we are saying we are preparing a production budget. So here we want to prepare a production budget. So we have product PS, product TG, and then we have the total. Product PS, product TG, and we also have the total. So in our products, there is the production. Sorry, we want to prepare a production budget. And we said in a production budget, you take your sales units, to it you less opening inventory units, and then you add closing inventory units. So you have sales units, less opening inventory units, add closing inventory units. So what do we have in this case? Forecast sales for the coming year are 5,000 and 1,000 units respectively. So we have 5,000 and 1,000 units. So the total is, you have your 5,000, to it you add 1,000 to give you a total of 6,000. Now, less opening inventory. Opening inventory 100 units and 50 units. So we have 100 units and we have 50. This is 100, sorry, not 1,000. 100 units and 50 units. Okay, total is not necessary, but I've just put it. Okay, total is not necessary. We can ignore it for now. So here we have closing inventory is 1,150. Now, this gives you production budget, production units budget. Production units budget is the result you get there. So what is our production units budget? Production units budget is 5,000. You less 100, you add 1,100, and that gives you a total of 6,000 units and 1,000 units as our production. So be very keen as we look at this. Because I said this is one question that I broke it down into parts. So in future, example 1, if I need production units, you will be telling me production units are 6,000 and 1,000 in example 1s, because all example 1s are the same. I broke down one question into parts. So that is how we prepare a production budget. Production budget is sales units, less opening inventory, add closing inventory to give you production units budget. Let's look at another example. So we have the second example. Still, we need to prepare a production budget. So in this example, so that we save time, let me copy paste what is in this other example so that we save our precious time. So that the format, I don't interfere with the format. So that is what we have. I've just copied the format so that it doesn't take me a lot of time. Okay, I'll remove all these because they are different products. So let's read the question and then we post the relevant data. So we have Newton Limited manufactures 3 products. The expected sales for each product are as shown below. We have product 1, product 2, product 3. So product 1, product 2, and we have product 3. So that is what we have, product 3. So you are being given sales units for each product. Product 1 sales units are 3,000. Product 2 sales units are 4,500. Product 3 sales units are 3,000. Let's look for the opening inventory, 500, 700, and 500. So opening inventory is 500, 700, and 500. Now the closing inventory is 200, 300, and 300. So to give you production units budget, we have 3,000, you less 500, and then you add 200. Now, that is what we have. We have 1, 2, 3. So we have production budget. This is the second example. Sales units, less opening inventory, add closing inventory to give you a production budget. So in conclusion to production budgets, we said to get production budget, you have sales units, less closing inventory, you add less opening inventory, you add closing inventory. You add closing inventory. So that's how a production budget is prepared. Let's move on. So we have looked at that example, and also we have looked at the example 2 on Newton. So our third type of budget is what is known as materials budget. Now, under materials budget, we have 2 types of budgets. We have number 1, what is called materials usage budget, and number 2, we have what is called materials purchase budget. Let me give you an example. Suppose you are making chairs and tables. You know that what are materials used to make chair? Maybe there is timber and there is metal. So what is the quantity of timber to be used? That is reflected through materials usage budget. So the quantity of timber to be used depends on number 1, how many chairs you want to make. Number 2, what is the quantity in kgs to be used per chair? What is the quantity of timber to be used per chair? So for example, if I will be making 1,000 chairs and each chair is taking 10 kgs of timber, the total materials to be used will be 1,000 times 10 kgs. So it will give you 10,000 kgs. So you can conclude that materials usage is 10,000 kgs. There is also what we call materials purchase budget. Now, in materials purchase budget, this depends on number 1, what you will use. What you will purchase will be influenced by what you will use. So you first of all look for materials usage budget, and then you less opening inventory, because you will not purchase what you already have. So you remove what you already have. So you remove opening inventory. And then you add what you want to remain with in the evening. So maybe once you have finished your production, what do you want to remain with? So number 1, what is a materials usage budget? Materials usage budget is production units times quantity per unit. So I've said the number of chairs times the kgs per chair. So an example, if we want 1,000 chairs and each chair is taking 20 kgs of timber, materials usage will be 1,000 times 20 to give you 20,000. I will come back to other examples. Now, we have also said what you will purchase will be influenced by what you will use. Remove what you want to what you already have, what is known as opening inventory, and then you add what you want to remain with. What you want to remain with is known as closing inventory. So materials purchase budget is materials usage budget minus opening inventory plus closing inventory. Now, this is in kgs, but you can also be asked for materials purchase budget. How much will you spend to purchase? So first of all, you will know what you will purchase in kgs, and then you multiply by the price per kg. Price per kg to give you the materials purchase budget. Now, I have an overall format here, and please let's understand this format before we go to an example. Suppose we are making what I was talking of. Suppose we are making chairs and tables. And chairs are using timber and also metal. And also tables are using timber and metal. If you follow this format, you will always turn out to be right. So your columns should be the materials because we are preparing materials budget. So your columns will be maybe if your material is timber and maybe if your material is metal. And then you ask yourself, what is the quantity of timber used per chair? And then you multiply by the number of chairs. What is the quantity of metal used per chair? And then you multiply by the number of chairs. Again, you come to tables. What is the quantity of timber used for each table? You multiply by the number of tables. And the same that. And then now you get the total quantity of chairs for timber, that goes to chairs, and the total quantity of timber that goes to tables. The total gives you materials usage budget. And same to metal. And then we less opening inventory, we add closing inventory to give you materials purchase budget. Once you get your materials purchase budget, you multiply by the price per kg to give you materials purchase budget in dollars. So always read the exams questions to find out what you are asked. Were you asked materials purchase budget in kgs or were you asked in currency, in dollars? Let us look at an example. So we have an example here. Now the examples are becoming longer and longer. The same question broken into parts. So a company produces product PS and TG and has budgeted to produce 6,000 units of product PS and 1,000 units of product TG. You remember how we got this 6,000 from another question and how we got this 1,000. What was produced? We got this 6,000 by taking sales units less opening inventory units, add closing inventory units. So the data about materials required to produce product PS and TG is given as follows. So we have our finished product for product PS and TG. So the kgs of raw materials consumed for PS is 12 kgs. For TG is also 12 kgs. The kgs of raw material Y consumed for PS is 6 and for TG it's 8. Let's continue. The desired closing inventory in kgs for X is 6,000 and for Y is 1,000. The desired opening inventory is 5,000 and 5,000. The standard price is 0.72 and 1.56. Required, prepare the following. Number A, materials usage budget. And number B, materials purchase budget. And then we have also example 2 that we will look at. So let's first of all start with example 1. So let's have a look at this example 1. So we are in materials budget. So it's here with us. So it's the same question. I don't need to reread it. It's the same question. So let me start solving it. So we have 2 products, PS and TG, but we also have raw materials. We have material, let me put it here. Material X, we said the columns are materials because those are the budgets you are having. And material Y. Okay, so we have, and then we have our products. The rows are the product. So we have product PS, and we have product TG. So those are our products. So remember, product PS and TG are consuming two types of raw materials, material X and material Y. So for product PS and TG, so we are being told a company produces product PS and TG and has budgeted to produce 6,000 units of product PS and 1,000 units of product TG. So if I have these, we are producing 1,000 units of product PS, sorry, not 1,000, sorry, 6,000 units of product PS, and 6,000 product PS is consuming 12 kgs of raw material X. So I'll multiply times 12. And for material Y, PS is using 6 kgs. The same product is using material Y. So we'll have 6,000 times 6. Now, what we have in this case is 6,000 times 12. And we have also 6,000 times 6 to give you 36,000. And we have product TG. So for product TG, we were producing 1,000 units. And you can see TG here. TG was again consuming 12 kgs of product X, of material X, and 8 kgs of material Y. So we have 1,000 units times 12 kgs of material X, and we have 1,000 kgs times 8. 1,000 units, sorry, times 8. So what does that give us? It gives us 1,000 times 12, and this gives you 1,000 times 8. So it gives you some values that we have there. So what totals do we get as the usage? So our materials usage budget will be 72,000 plus 12,000 for material X. So it will give us materials usage budget, of course, in kgs. Materials usage budget in kgs is 84,000 kgs of material X and 36,000 plus 8,000. That gives you 44,000 kgs of material Y. Now, we said that once you get the materials usage, to it you less opening inventory and then you add closing inventory. Less opening inventory. So you can see down here, direct materials for X and Y. Desired closing inventory is 6,000 and 1,000. So closing inventory is 6,000 and 1,000. And opening inventory is down here, 5,000 and 5,000. Opening inventory is 5,000 and 5,000. So this gives you, it gives you materials purchase budget in kgs. So that gives you materials purchase budget, that minus plus 6,000. So that gives you 85,000 plus 40,000. And then you come and look for times the price per kg. Price per kg. So the price per kg, standard price is 0.72, and this other one is 1.56, if I'm not wrong. So 0.7, so it will give you now materials purchase budget in dollars. So that gives you 85,000 times 0.72, 61,200. And this gives you 40,000 times 1.56. So it gives you those values there. So we have materials purchase budget. We have materials usage budget. Maybe let me put it in a different color. So we have that materials purchase budget. We have materials usage budget in kgs. And we have materials purchase budget in kgs. And we have materials purchase budget also in dollars. So that's how materials budget is prepared, be it a materials usage or materials purchase, be it materials usage budget or materials purchase budget. You know, you guys, it's also good to, it's important to do an assignment. So please note down, I'll share with you this Excel sheet. So note down this example 2 of materials. I want it to be an assignment. So I've written their assignment. So when you open this sheet, please try this example. I want it to be an assignment. And I can even share with you the template. Remember, that is the template. So let me post for you the template here to save your time. I'm posting the template so that when you are doing it, you will not take a lot of time. So there is a template. Okay. I need to add. Okay, I was just adding another column, another row, sorry, because we have 3 products. We have product 1, we have product 2, product 2, and we have product 3. Product 1, product 2, and we have product 3. So here we also have material M1, material M2, and material M3. So please make sure you complete. I've given you the template. I'll share with you the Excel. Try to ensure you complete it on your own. Try to complete it on your own. Remember, the columns are the materials. The rows are the products. So that is materials budget. Maybe one more budget and then we'll see where to stop. Let's see. But the budgets remaining are not as long as this one. So let's look at labor budget. Labor budget as our next form of budget. So let's go back to our screen, our PowerPoint. So labor budget. Now, how do we measure labor? Labor is measured in hours. Now, in order to prepare a labor budget, number one, you need to know what are the total labor hours used. I'm repeating. In order to prepare a labor budget, the first step is to know the total labor hours used. Now, labor hours is production units times hours per unit. Production units times hours per unit. Now, once you've got the total labor hours, you multiply by the rate of pay per hour. Total labor hours times the rate of pay per hour. We have an example. So in our labor budget, it's fairly straightforward. We need to know what is the total labor hours, and then you take the total labor hours times the rate per hour. The same question, and we are going to the labor part of it. A company produces product PS and TG and has budgeted to produce 6,000 units of product PS and 1,000 units of product TG. The data on labor hours required to produce product PS and TG is given as follows. You have PS takes 8 hours per unit, and TG takes 12 hours per unit. I'm reading these 8 and 12. And remember, the number of units of product PS is 6,000. And the number of units of product TG is 1,000. So standard rate for pay is 5.2 per hour. So prepare a labor budget. Now, in preparing our labor budget, just be patient with me. Within the next 20 minutes, we'll be done. So in preparing our labor budget, okay, solution for the labor budget. So in preparing our labor budget, in this case, we said we need to know, first of all, the total labor hours. The total labor hours for product, PS, and the total labor hours for product, TG. Now, this gives you 8 times 6,000. And this TG gives you 12 times 1,000 units. Was it 1,000? Yes, 1,000 units. So that gives you the total hours for product. So 6,000 units. You can see there is 6,000 units. So 6,000 units times 8 hours for product PS, it was taking 8 hours per unit. So this will give you 8 times 6,000. And this other one will give you 12 times 1,000. So this will give you a total of the total labor hours. Our total labor hours will be 48,000 plus 12,000. So this will give you hours. And then we said, once you get that, you multiply by the rate per hour. Now the rate per hour is 5.2. Now, this gives you total labor budget. So this gives you a total of 60,000 times 5.2. So it gives you 312. So that gives you a total of, the total labor budget is therefore that. So this is the simplest budget to prepare from the examples we have looked at. So remember, these are hours. You get the total hours for product PS, total hours for product TG. You get the total labor hours, and then that gives you, it gives you that. Let me look at a different example. Example 2, I feel I should do it because it's quite different. So just allow me to do example 2. I feel we should do it because it's quite unique. So let's read it so that I explain the uniqueness of the question. So under the unique, so in this case, we are being told Newton Limited manufactures 3 products. The expected production level for each product are as follows, as shown below. Products we have budgeted production in units. Now, this is why I wanted to do the question. 2 types of labor are used in producing the 3 products. Standard times per unit and expected wage rates for the forthcoming year are as shown below. So we have the product, we have hours per unit, we have skilled labor, and we have semi-skilled. So I have 2 types of labor. There is the first one, which is called skilled. Let me bring it here. Skilled labor. And there is another one called, is it semi-skilled? Semi-skilled labor. Skilled labor and semi-skilled labor. Okay, skilled labor and semi-skilled labor. Okay, so we have 3 products, product 1, product 2, and product 3. Product 1, we have product 2, and we have product 3. Product 3. And then we will get the total labor hours, and then we'll multiply times the rate per hour to give you total labor budget. Total labor budget to give you total labor budget. So that is what we have. I don't think it's necessary for me to solve. I just wanted to explain the concept because the concept remains the same. So it's not necessary for me. Let me just highlight the major areas. Because I've covered already example 1, it's very easy to know. Maybe let me give the first part, 2,700 units times the hours is 3. For product 1 is 3. For the skilled, 3. So you will post the relevant figure there. For the semi-skilled, again, 2,700 units times 4. Where did I get 4? These 4 here. And you repeat the same for the second product. Second product is 4,100 units. 4,100 times 1. And this other one is 4,100 times 4. The last one is product 3. We have 2,800 times 3. And here we have 2,800 times 2. You get your answer, you get the total. And then you come and multiply by the rate. Skilled labor is to be paid at a rate of 9 and semi-skilled at a rate of 6. So skilled will be paid at a rate of 9 and semi-skilled to be paid at a rate of 6. I believe we can now complete the question. So what you need to do there is 2,700 times 3, you get your answer. The next one is 4,100 times 1, you get your answer. And the next one is 2,800 times 3, you get your answer. And then the total, of course, the total is 2,600. Now 2,600 times 9, 2,600 times 9, it gives you 185,400. I believe for the semi-skilled, you can complete it on your own again until you get the total. So there it will be summation. Sorry, I wanted to capture the first one. Okay, let me just leave it. You can complete it on your own. I just wanted to capture summation of these times, okay, to give you the value. So that is production, sorry, that is labor budget. The last budget that I want to explain, but not do it, is overheads budget. Overheads budget are prepared in the same way as labor budget. I'm repeating, overheads, because it uses hours, it's prepared in the same way as labor budget. Overheads budget are prepared in the same way as labor. So there is a question here, but you just need to separate the variable and the fixed. So there is a question that we want to have it instead of going back to the slides. Let's just have this question, we do it, and then we conclude the session. So a company, so our solution, a company produces product PS, and okay, most of the concept is the same as that example on labor. So let me just pick this. Let me just pick that to save time. It's the same as that example, most of the contents. So a company produces product PS and has budgeted to produce 6,000 units of product PS, 6,000, and 1,000 units of product TG, 1,000. The following data relates to machine hours. Now it's not labor hours. So these will now be total machine hours. Now not labor hours. Total machine hours is 60,000. How did we get 60,000? We took 6,000 times 8, 6,000 times 8 to give you 48,000, but machine hours, not labor hours. And we have 1,000 times 12 to give you 12,000. And then you add the total machine hours is that. Now, there are now, the difference is now here. That is what I wanted to explain. The difference is here. Now we need to get total variable overhead, and we also need to get fixed overhead. And then we'll have total overheads when we add variable plus fixed. So that is what we need to have. So the variable rate was 1.54. So we will take 60,000 hours times 1.54. So that will give you the variable overhead. We have said 60,000 times 1.54. So where is 1.54 coming from? The variable rate per machine hour. The total machine hours are 60,000. And this other one also, this other one will be 60,000 times 0.54. So that will give you 60,000 times 0.54. So that will give you 32,000. So what is our total overheads budget? You take 92,000 plus 32,000. It gives you 124. Remember, this was in dollars. This is in dollars, and the total is also in dollars. So that's how we prepare an overheads budget. An overheads budget is prepared in that context. Again, if we have two types of labor, there can be maybe skilled and semi-skilled. Again, you split in the same context. You split in the same context. And therefore, that brings us to the end of functional budgets. That brings us to the end of functional budgets. So we have looked at, in this session, first session, we have looked at what is a budget. We've said a budget is a quantitative plan of action prepared in advance of the period to which it relates. We have also looked at what are the reasons why we prepare budgets. We have looked at steps followed in the budget making process. And then finally, we looked at the functional budgets. So we have solved that. So in our next session, which is tomorrow, we will look at fixed and flexed stroke flexible budgets. Fixed and flexed stroke flexible budget. So that brings us to the end of today's session. It brings us to the end of today's session. Next session, we look at fixed and flexible